This week on The Week Ahead, it's common knowledge that cutting taxes can help our financial situation, but the government does not listen. Plus, hear about a certain fall trend that might scare you. Welcome to The Week Ahead. I'm Frank McCaffrey. A recent survey of members of the National Association of Business Economics finds that the members of this organization believe that lowering taxes would be the way to solve our economic problems in this country. Now, the textbook move of dropping taxes seems to be a no-brainer. For more on this, we're joined by Americans for Limited Government President Bill Wilson. Bill, why is our government not acting on this?
Washington is just immune to the facts. Because they don't want to hear the facts. You now know from a fairly extensive survey of economists throughout the country that the overwhelming majority of those economists are saying that the best way to get us out of this debt trap that we're in right now is to reduce spending, and then secondarily to reduce taxes. Not to raise taxes, increase spending, borrow more money. All of these things that Obama, Pelosi, and Reid and their band of merry friends think are the way out are the exact opposite of what economists are telling us to do. There has never been a pain-free way out of this. The only question is, are we going to accept where we are and move quickly to deal with it? Or are we going to continue this drip, drip, drip of pain that the Obama administration has been imposing? We have to cut spending. And that's not the fairyland world of let's reduce the rate of increase. We have to make serious, absolute cuts to government spending and bring the tax rates down for everyone. And if government then has to live within a much smaller universe of resources, then so be it.
Thank you very much, Bill. Fall is just around the corner, and while we cannot predict the future of the market, the trend in fall tends to be that the market collapses. For more on this, we spoke with Americans for Limited Government's Robert Romano. The Panic of 1873, Black Tuesday in 1929, the stock market crash of 1987, and the crash of the Great Recession. They all have one thing in common. They took place in fall. There are a number of factors that cause most crashes to happen that time of year. Fall is a time of elections, the end of the fiscal year, and businesses are coming off what is generally a slow summer.
Now, while this fall might not see a crash or some sort of a market event, look forward to 2012 when the election is ongoing, and you can see a lot of turbulence that occurs historically in election years.
Now, we can't predict market performance, but the current shakedown and the trend of fall crashing might lead one to believe that dark days are ahead. ALG's Robert Romano sees another trend. In
2008 and 2009, you saw a correction on the downside to about 6,500 on the Dow Jones Industrials. So we're up about 100% from there before the most recent correction began, which, the downside risk there is anyone's guess, but it could be painful.
Romano says the market is a very scary place to be.
You really can't predict what's going to happen, but the economic indicators right now are very, very weak. You have very slow growth, less than 1% in the first quarter, a little over 1% in the second quarter. Unemployment remains high, manufacturing indicators are down, consumer confidence is down, consumer spending is down.
The Great Depression was seen as a hangover of the Roaring '20s, where too many people were putting just too much money on the market. Economists say the Great Recession is a result of the credit mentality. And that's all the time we have for the week ahead. Please join us again next time. For more on these and other topics, visit netrightdaily.com.